So we've got two big decisions coming up, the BOE and the ECB on Thursday of this week.
Correct.
And I want to do a little bit of compare and contrast.
Sure.
UK versus Europe, and particularly their growth rates. We have a chart actually that shows the rate of GDP growth. But how do you analyze the difference between the UK and Europe at the moment?
Well, so people forget, but Europe had a spectacular year of growth last year, and all that's happened so far is you've come off from cyclical highs, but the growth path still looks strong. There's far fewer clouds over continental Europe than there are over the UK right now, but as discussed prior, if you start seeing progress on Brexit, and if you start seeing more normalized monetary policy, you could see a significant rebound in the pound, which would obviously hold back some inflationary pressures.
So let me ask what progress on Brexit means, because as far as I can tell, what's happening is people in Europe are saying, you know what, we don't have to decide all this stuff. Let's just sort of keep it a little bit vague and sort of say we'll keep going along. Is that progress? Will that be enough for the markets? Will that be enough for investors?
Well, it's progress in terms of there's maybe light at the end of the tunnel now. There haven't been any dramatic developments other than we're making progress, we're agreeing to talk. It's very similar to what's going on in the US and NAFTA. That being said, when you look at the broader equity markets for the UK in particular, there's been far less consolidation there and merger activity, principally because of that overhang. So as optimism increases, you could see more mega cap M&A.
And of course, the backdrop is the central bank policy after this, with UK wages, et cetera, moving higher. And the question being, do you see central bank divergence or convergence?
Central bank divergence will continue, right? I mean, you have the Fed that's going to...
The story was convergence, and now that has been
that was delusional.
Out.
I mean, like coming into this year, we could never understand why people were so bared up on the dollar, given the very likely path of accelerating divergence, right? And we're going to continue to get accelerated divergence. You're going to have the Fed hike 1 to 2 more times this year, at least 2 next year, maybe 4. The UK may hike once the next 12 months. The ECB probably won't hike at all. So you're going to see continued divergence in our humble opinion.
And the same thing goes for earnings estimates too.
Yeah.
So if you come inside the Bloomberg, you can see just that. So the white line is earning estimates for the US, the blue line is earning estimates for emerging markets, and the yellow line is emerging markets for European equities. But how long can that actually continue? Like, we buy and sell to somebody.
Yeah, that is true. That is true. However, we would say how many times has consensus been that you don't want to own US stocks, you want to own overseas stocks because you have lower valuations. But sometimes things have higher valuations for reasons, and corporate America is extremely efficient right now, obviously benefiting from tax reform. And so we don't see a major sector rotation or country rotation from the U.S. overseas anytime soon.